In terms of the sectoral impact, you did briefly mention automobiles as an example, but if you were to look at it in a more detailed way, which sectors do you believe will be the most impacted, and how should investors therefore respond in terms of their portfolio choice?
So yes, auto component manufacturers around the world and auto manufacturers in the US, all of whom depend on a global supply chain, will be impacted. But it's not just that. From a US standpoint, anything that uses steel, anything that uses aluminum, those are items that have already been subject to tariffs. If you're looking at from an Indian investor standpoint, the IT services companies didn't get tariffed, but their business depends on US clients, and if the US clients are going into a recession, that's going to impact their willingness to give out more IT service contracts. So I think IT services are hurt there. Pharma hasn't yet been tariffed, but I would not be too quick to assume. President Trump has been very clear that that's coming. So there are other things that are coming that are going to be negative. So the pharma sector is currently seeming like it's safe, but I'm not sure it's safe. So I would say, from an Indian investor standpoint, domestic economy facing companies are going to do way better. Domestic service industries, but keeping in mind that the Indian economy will feel some negative blowback, although nowhere near the negative blowback that other more export-dependent economies will feel. From a U.S. standpoint, I think we're going to get the worst of all worlds, which is both an inflation and a recession. The rest of the world will just have to worry about recession, not inflation.
Arvind, in the recent past, in the market correction that we saw in India, IT, including stocks like TCS, let's bring that up, have seen significant correction. And you're absolutely right, nearly 50% of large cap IT sector business comes from the American revenue market, and obviously they are going to be impacted in the second round. Do you see any possibility of IT companies being able to diversify their markets? They've also already been buffeted by technological changes, or should we remain doubtful of their capability in this regard?
Well, I mean, it takes a long time to diversify into other markets. US is the most open market in terms of IT outsourcing, and like you said, the technology, the quickest, fastest change adoption in AI applications is in AI for writing software code. Today, you're seeing companies, startups, do it with one engineer without needing a lot of people. So the era of junior programmers, who do a lot of grunt work in these IT service companies is over. And to me, that is actually one of the biggest challenges for India in terms of employment creation. This has been a little hidden engine that has worked well, and it has created more of a ripple effect on benefiting the domestic economy in other ways. So I'm not an IT fan, and this just puts another. But having said all that, companies will need help, whether it's in the US or elsewhere, in implementing AI. So niche companies that are able to help in that will be able to overcome the short-term slowdown. Will be there, but they will be able to overcome it. But I think from an Indian investor standpoint, there are so many more domestic-facing companies. There's such a wide variety of choices. Why try to pick the bottom in the IT sector?
If you like the video, do like, comment, share, and subscribe.